Top Glove Corp reported a third loss-making quarter as the glut in stocks and ongoing moderation of average selling prices, compounded by rising production costs, weighed on its performance. The group's second quarter FY 2023 net loss stood at 164.67 million ringgit, compared with earnings of 87.55 million ringgit a year earlier. Revenue more than halved to 618 million ringgit from 1.48 billion ringgit. The dismal results dragged the world's largest glove maker's performance for the first half to a net loss of 332.9 million ringgit, against a net profit of 273.27 million ringgit a year earlier. Half-year revenue declined 58.2% to 1.25 billion ringgit from 3.09 billion ringgit the previous year. Top Glove Managing Director Lim Cheong-wan said in a statement that the glove industry will recover in due course, as its fundamentals remain robust and unchanged, and that it is a matter of time before the group's results are more reflective of the glove industry's potential. Top Glove's shares rose 19.3% today to 83.5 cents, giving it a market capitalization of 6.85 billion ringgit. The Kuala Lumpur High Court has refused to grant a permanent stay of a winding-up petition against Serba Dinamik Holdings and its 3 subsidiaries, pending its appeal to the Court of Appeal. Judge Ahmad Murad Abdul Aziz said, having read the affidavits and considered the submissions made, the companies failed to prove there are special circumstances for the court to grant the stay of the winding-up order. He said it was better that the provisional liquidator be answerable to the court rather than leave it in the hands of the directors of the companies. The judge added that the court disagreed with the firm's submission that the refusal in granting the stay would result in the appeal being considered futile. He ordered the company's executive directors to pay total costs of 11,000 ringgit to the syndicated financiers, the bilateral financiers and Hong Leong Islamic Bank. He also fixed May 26th for 2 other entities who are creditors to intervene in the matter. Carlsberg Brewery Malaysia announced its final single-tier dividend per ordinary share of 25 cents, payable on May 18, 2023. This brought the group's total dividend per ordinary share for FY 2022 to 88 cents per share, the highest declared by the group since the financial year ended December 31, 2019. It represents a payout of 85% of the group's net profit for the year. The entitlement date for the final dividend is on April 21, 2023. Due to the COVID-19 pandemic and the economic hardships that ensued, Carlsberg Malaysia's dividend per ordinary share fell to 40 cents in FY 2020 and 56 cents in FY 2021. As the economy started recovering in 2022, so did Carlsberg Malaysia's profitability, with earnings coming in at 317.05 million ringgit, 57.74% higher year-on-year. The surge in profitability was on the back of a 36.08% year-on-year increase in revenue to 2.41 billion ringgit. Carlsberg Malaysia closed 0.56% higher at 21 ringgit 60 cents today, giving the group a market capitalization of 6.6 billion ringgit. Bank Negara Malaysia reportedly said the country's lenders have no direct exposure to the failed US banks and that the Malaysian banking system remains well capitalized. This amid a global bank stock rout as investors cut exposure on fears about the health of the global financial system. Quoting the central bank, Bloomberg News said any indirect exposure from counterparties or borrowers with linkages to the US banks is also very limited. All licensed banks in Malaysia must comply with stringent capital and liquidity rules on an ongoing basis to ensure banks can withstand severe macroeconomic and financial shocks, BNM was quoted as saying. Separately, CGS-CIMB research analyst Winston Ng is also of the view that the collapse of Silicon Valley Bank would have minimal impact on the local bank's earnings due to their negligible exposure to the US. The research house, which retained its overweight call on domestic banks, is projecting a stronger core net profit growth of of 9 to 11% year-on-year for domestic banks in the first quarter of this year and 17.8% for the full year, mainly driven by the non-recurrence of Cukai Makmur and higher non-interest income. Hence, Ng said the recent sell-down of banking stocks would represent buying opportunities for lenders. His top picks are RHB Bank with a target price of RM7.62, Hong Leong Bank with a target price of RM25.30 and Public Bank with a target price of RM5.20. The Federation of Malaysian Manufacturers, or FMM, believes that the intake of foreign workers in Malaysia would easily exceed 1 million people in 2023. FMM President Tan Sri So Tian Lai said the recruitment of foreign workers has improved from previous years, with the government's implementation of the Foreign Worker Recruitment Relaxation Plan. Based on the FMM Business Conditions Survey for the second half of 2022, So said 59% of respondents would be able to meet their foreign worker needs and obtain their quota approval. Only 8% were not able to do so, while the remaining 33% had indicated non-applicable. On the utilisation of free trade deals, So said only 11% of Malaysian manufacturers are utilising both the Regional Comprehensive Economic Partnership or RCEP and the Comprehensive and Progressive Agreement for Trans-Pacific Partnership CPTPP agreements. 41% said they did not know where to start. Another 33% said they are utilising other FTAs and the duty exemption rate is lower. 16% are not importing or exporting and 6% complained of a tedious application process.